Good morning, everybody. Happy Friday. And yesterday was definitely interesting. And we'll see if this move is for real or whether it may be related to today's options expiration, what kind of influence that had. This 4,000 strike in a SPX, which has been extremely large, almost equal on both sides, puts and calls. It's going to expire. And let me show you. Hold on. Should be able to see this. I'll drag it out of the way. Yes. You did see this other screen. These top ones are sorted by open interest. And these are just today, right? But it's mixed because of the options expiring in different periods. Anyway, you can see at 4,000, this big open interest, and it's been pretty steady for quite a while. And so it'll be interesting to see that whether it gets rolled or whether it's going to be unwound today. So what could happen, even though I'm just going to move this back out of the way, what could happen, I think, even though we could have some volatile moves, I think it has a tendency to potentially drag it back and toward that area. And you see, this has been pretty wild back and forth around here, but it kind of gets pulled back toward that strike. I'm 400 in SPY, but there's something to keep in mind. Things might look kind of gleeful or nasty at some point during the day, and then you'll find it turning right back around again because of the options expiration, but we shall see. So as you can see, prices are dropping down, and we're about halfway into that bullish bar. Bullish wide range bar in a downtrend, and now gapping to the middle of it. We'll see where it ends the day, but clearly that is bearish to be gapping that far down. Our factory work is so as far as we'd like to see the open and close in the upper half or the upper third. And now this is, well, we'll see where it opens up in another 25 minutes or so. But opening down here, obviously not a good start, and there isn't much to stop it from going down until the bottom of the range. So while it might get to the bottom of the range, it may get dragged right back up again because of the options expiration. All right, so we're down here in the middle. Do take a look at the futures next. And not quite down there, huh? This is where it was yesterday. And not into the middle, but it's overnight. But you can see right here is what we call an area of minor support. Somewhere down here, closer to 39.40-ish, possibly. And I just eyeballing it, maybe the fib aficionados have some lines overlapping there. Who knows? That might come into play. But the 200 MA is right there. All right. So we got a moving average reference point on the futures. We'll see where that lines up with SPX. And all right. So the 200 MA, it must be opening up just based on what SPY is a little bit below. And so the average now, daily range average, what things have been moving around, is now about 90 points. And so I just eyeballing this, putting these lines near the the open and going back and forth and then saying, okay, 90 points, it's about a little over 2%. Can we find SPX options expiring today? Beyond that, now it's opening up and I could say, okay, it's there. Could we get, let's say, down there? And then where does that put us? So Jake has 39.30. I wrote down 39.25. Either one. Let's see where that lines up. Right down here. So while it's at the edge, right? It's at the edge. Even if it goes down there today and knowing this 4,000 strike is up there, it is far enough away that lines of defense, 200 MA, prior support, we could have a uncomfortable moment, but it should be fine based on that distance. Here I've marked off that 4,000 level. And then up above, I've got the same number as Jake, 40.20. And so 40.20 opening here, I think the downside is the no-brainer. And I say no. Now, even, well, you see, it's down here. It doesn't mean that's where it's going to open, but because we still got time to go. Let me see what McGrath says. It was a gamma-induced rally. And that's kind of what I alluded to, yesterday's move. And let me see the rest. 4,000 decay dealers have to short more. The 4,000 lock limits to 1 delta at the close, more shorting. Remember, SPX, AM expiration, it comes off at the open. Okay, so dealers have to adjust. Yeah, so the open might be a little wild, right? Look a little further back for levels. Yeah, so I still think down here it's going to be okay, but we'll see how things jiggle out in the first few minutes. And then from there, just whatever the craziness is that could occur, just keep this in mind, and we'll see how it unfolds. It should be exciting, I think. So the movement. So there you have it. I think in addition to the gamma effect and triple witching and all that, it sure seems that money flowed into things that maybe they wouldn't, and possibly there were. I'm just my thoughts. Maybe there were a lot of bearish hedges, say on things like Microsoft, which had one of the best patterns, and maybe Intel and maybe some others. That money flowed, there into that, buying it as well as hedges because of this banking debacle. Everybody pulling their money out of the bank to try and be safe. They put it in Bitcoin. Maybe they move it to JP Morgan or Citibank, big banks, or into the stock market. So it's kind of crazy times. And, when I see transportation stocks going down and silver and copper and airlines and crude oil all going into mini crashes, the F is certain stocks going up like they did yesterday. So it's certainly unusual, but that's why we love doing this. All right, let's take a look at the rest. So up at resistance, it was here yesterday, and what happened, and it pushed up, it created the void. It's coming back down a little bit, wiggling around here. And so, it's moved from bottom of the range to the top of the range. So even if there's some buying in the morning and it pokes above here, I would suggest not getting involved and thinking that, breakout kind of scenario there, because that's greater than 100% retracement. And of course, stepping out a little further in time, it'll be real interesting to see where this ends the day, because look, a wide range bar like that, gamma aside, news aside, that's a bullish bar. And If it ends like this at the end of the day, while it's at resistance, the implications are that a significant low is put in place that should not be violated. It's a range expansion bullish bar. So it kind of implies that even after some consolidation, unless it retraces deeply into this in the next week or two, it should go higher to the next level. We'll talk about that next week and so on. And so here is just one example of the damage that has been done by what's occurred. And while it's just, been this whip back and forth in the small cap futures here, other things like you saw yesterday were rising. And while, Qs, techs have been bullish, being positive, I mean, this is bearish. I just say, hey, you know what? We don't want the risk here, whatever, we don't think that these can move up and outperform any longer. And so now they're down here near, this support level. And, something as bearish as this, as well as, the oil and steel and copper, and then seeing tech do that, things are out of whack. That's another way of saying things are a little crazy here. The Dow, which certainly looks like that has to drop. So how much higher can the NASDAQ go? And I doubt it. Or somehow this has to recover from this terrible pattern that's going on here. Dollar's been all over the place. We'll see how that unfolds next week. Interest rates have dropped, and they're just flipping back and forth here. So we need more information to see if they're going to be able to settle down. And Bitcoin only makes sense to me that people thought, hey, this is safer than a U.S. bank. And I guess for the moment it is, but I mean, just look at how that's moving up still. And it's cleared these highs. Remember, not too long ago, down here, it was consolidating at the bottom of this big bearish bar, threatening to come down to here. And now it's completely reversed that scenario completely. And now with this wide range bar, I mean, this is insanity, falling like this and just going back up again. So look, if you're new to the markets, this is not normal at all. I mean, this kind of price action and these kind of patterns. This is normal, to move up like that and go through a bottoming process like this, and then the breakout and the move up. That's normal. This is not. And so again, here's a positive. Semiconductors still within a trading range, but condensing this sideways price action at resistance, that's positive. Now, again, we look at that and say, all right, now that's occurred, it has to prove itself at that resistance and stay above there. And ideally, if it's stay within this trading range, well, whatever possible bearish action happens. McGraw, is he talking about, the one that we did in the green room? I don't think that's on, it might be on YouTube. I can find it. All right. What else? Well, just as I mentioned airlines falling, and you can see rails and truckers and so on. So I've seen a lot of things in all the years, but to see such a divergence between markets collapsing and others tech stocks rallying in that way. I don't think I've ever seen anything like that. All right. Okay. I think that's it. Here's transports. So probably going to be some volatility, and wherever it seems like it may be going through the roof or going through the floor, it's probably going to get dragged back again. And just a quick view of internals here. Sentiment never got down here with all this bearishness. And I see that as, kind of complacency, because, you have all these markets dropping like that. And maybe it's got something to do with the expiration. I don't know. But one thing I've learned over all these years is kind of discount the news and stick with your method. And, this tells me that when a move down like this should have been down here. And now that this has come up, got that 4,000 level up there, this options expiration over, I would not surprise me to see this come all the way back down again. But we'll see how that unfolds. And when that happens, this coming down here, we look for the mending process to begin and bottom out again. All right, to you, Dan.
Good morning. But Greg, just to add one comment to that, you're talking about the alignment to have a beautiful confidence for a multi-day swing trade. But in our experience, whenever we get the oscillator cooked like this, regardless of that, it kind of, to me, supports a tradable bounce with a pattern, obviously.
Totally agree, Dan. But the difference, the thing is, I get what you say. We want to have the ideal scenario of everything in alignment, but breadth being down where it was, markets have gone up. Now, again, I haven't seen it where it's all before let's say everything went down, right? And then we got the bounce. But here we got this scenario where there are certain things, and I think, obviously because of this bank situation where things look so terrible, and then other things that look, you saw Microsoft, and we talked about that early in the week. It was like, hey, this is like the best pattern. I think that was the end of last week. But because, and I'm being honest about my own mind here, point of view, is that I saw that Microsoft pattern, but there were so many things that were out of alignment. It was a trade that should have been done, and I didn't do it.
Well, I'll just add to that. I had Microsoft in the nightly video on that day.
Yeah.
I said, buy this tomorrow over the high. And then there was a gap down in the market because of more bank news, and you could see a small gap. And I canceled it because of the uncertainty in the broader market. And this classic case of it was on its own page. FANGs did real well this week for sure. All right, let's see what we got here. We did put on a number of put spreads yesterday. Happy St. Patty's Day and happy Zero DTE Day. It's not going to be easy for Zero DTE, in my opinion, because of this, because we've run so much. I don't know, we'll just take it play by play as we always do. All right, so Amazon did a nice put spread. Some in the green room did a directional cream put spread, and I covered half on a number of these. D-Dog put spread, little 180 reversal and support. NVIDIA, we're still in. I just sent an alert saying that it looks fantastic, but we're over 80% of max profit, and so I said let's just trail a 5-minute bars low to avoid 7 days of risk. But now I regret not giving that to subscribers yesterday. We talked about Microsoft. I mean, there was a lot of good directionals. We talked about them in the green room, but I was kind of waiting for the close, as we often do, and the market just took off intraday, as you can, see right here around, right around 11 o'clock when I went to the gym. It was a climactic sell setup. And I wasn't watching the news, but I said, I'm pretty darn sure it's related to, bailout Rama of the banking system. So that's how we're going to handle that one. Snap, nice cap. We did a put spread on that. I already took half at 50% yesterday. So we did good in the weekly options trader. Talking about banks, Frick had to get 30 billion infusion. So that one could have been on the chopping block this morning. I know Rangan asked me yesterday, he said, Dan, I can sell the $5 puts for tomorrow. Or maybe it was 15, I forget. And I said, well, based on the charts, I'm 1000% in support of it. But I said, you're just taking gap risk. That it's going to have a time bomb overnight. That's the risk you're taking. But if he did take it, regardless of the gap down here, he's going to be a full profit, probably close it at a penny if he wanted to at the open. But yeah, I was reading something also in the journal that the Fed's discount loan window to banks, like all year long, it's never exceeded 5.5 billion. And then now in 2 days, it's 155 billion. And then with the FDIC's loan was 200 billion. So there's already over 300 billion in loans to these banks that I'm sure there's a place to go find out who they are, where the cockroaches are. But that just supports that there are similar major problems in the sector that ain't going to go away. And hey, do y'all remember I said yesterday? Here, let me find it from I actually sent it to my dad. This was, yeah, here. So this, okay, read that first paragraph that's in the Wall Street Journal. And it's exactly what I said the other day. I'm like, hey, just because they came out and said they're going to defend these, 2-3 banks, depositors, whatever, the news was all over about, oh, that's an implicit guarantee of all depositor of all banks. And I said, well, says who? Why are you jumping to that conclusion? They don't have authority to do that unless it meets that first paragraph. And that's what the Fed did, is apply that exception to guarantee all deposits. So that is not written in stone that all other banks are protected. They got to make an individual case. And so I think if the Fed did start saying, well, you're not that important, so we're going to let you go under, then that's going to be a big old shakeup again in the sector. All right, so this is one I posted as a core long. And so I'm mad that it's gapping up over our entry. But daily, weekly, monthly on coin looks fantastic. So I can't, I'm not chasing, but I'll watch it on a pullback. Also southeast here, I like a lot. Nice bullish consolidation after this igniting breakout, bullish weekly, monthly. That looks great. Since coin is up, I look at Mr. It's one of these Bitcoin stocks. Man, Bitcoin rallied 27,000 this morning. So Bitcoin stocks. I know we talked about Mara yesterday, and I said, yeah, I like it. I said it's had a big run, so I would have preferred another 1 or 2 sideways days, and then in which case next week it would be a breakout target 200 up here, but now it's moving. Playboy had earnings. Remember David Wygant and I mean, I got to go to a monthly. I remember trading this thing in the 40s and 30s. Look at that monthly. Man, oh man, look at that weekly chart. Now it's a buck 79. That looks like it's headed to zero. Tupperware is a Climo, but need a potent reversal. X-ray. I said let's try to sell a put. That's a gap from a Climo. And SLX here is similar. The steel ETF ring got a downgrade. And this is actually, I updated my core long list yesterday. Oh, let me give it, well, you all were here. Well, here, I'll give it to you again anyway. And some of them, that's where I got Southeast from, and that's where I got coin from my core list. But that doesn't mean, the other ones are just watches. But ring, I kept on my list, even though there's no immediate action whatsoever. So now that I got a downgrade, guess what I did? I set an alarm at 32.30. If it can, this is an ugly gap down. If it can snap back, then it might be the start of something. Groupon had earnings. That's in a death trend. TTD. This will be a beautiful 1, 2, 3. If we get a bullish inside bar today for Monday, same with Apple. Beautiful 1, 2, 3. It's a wide range breakout after a correction bar. All right, I see it popping right here. I do not want it to run today. I want it to rest today, but stock doesn't care what I want. Baidu, I love gap reversals like this that close with an engulfing bar with a price void. So that's put spread idea. This bio getting whacked, 120 bucks. CCL is a Climo. I was hoping that it would keep going in the low 8s before reversing, but it's still a watch. Procter & Gamble would be a no-brainer put spread. SYK, little, broke out and a little turn there. Hershey, breakout daily, weekly, monthly. I'm watching for an entry. IAI is the insurance ETF, which also got whacked along with KRE. It's amazing how similar these two are. I mean, I get it that insurance companies have tons of money and, they got the same problems with bonds and so forth, but to look so darn similar. Wow. So, there's a gap down. AIG I like. So let's scan, you all remind me. Let's scan the entire insurance sector. So this looks good. That's a beautiful, that's what we call a potent reversal bar. Hey, I see our ZTO here. Greg, do you just want to sell this? It's a beautiful 15 though. We got a third left. How do you want to manage this?
Sell it.
All right. Yeah, that's a beautiful trade. We gave yesterday as a 1, 2, 3 on earnings. All right, ZTO. Sell 28.87. Strength, take money. Now 28.94. All right, nice trade there. Now Cisco, yeah, that was on my list yesterday, but it ran too much. I would have I look in the morning when it was an inside bar.